I'm sharing the results of a little experiment I did. I invested $5 a day into FXAIX to see what would happen if I stuck with small, consistent investments every day. FXAIX, aka the Fidelity 500 Index Fund, is designed to mirror the S&P 500, which means it's packed with the 500 largest US companies you've definitely heard of, like Apple, Microsoft, Amazon, Google, Johnson & Johnson, and tons more. These companies come from all kinds of industries: technology, healthcare, finance, consumer goods, energy, you name it, it's in there. FXAIX moves with the market. When the S&P 500 goes up, FXAIX usually goes up too. If it goes down, well, FXAIX takes the dip along with it. So it's like a mini mirror of the entire US stock market. By investing in FXAIX, you're buying into all of these companies without having to pick each one individually. No need to stress over which tech giant to go with or which healthcare company might be the next big thing. You get a slice of all of them. So if one sector or company has a rough quarter, others can help balance it out. This approach is one of the core principles of investing. Don't put all your eggs in one basket. With FXAIX, you get exposure to a wide variety of industries, helping lower overall risk and creating a stable foundation for your investments. This fund is like a one-stop shop for market exposure, offering a way to tap into the stock market's overall performance with just one investment. It's simple, it's diversified, and it's ideal for those of us who don't want to guess which stock might be the next big thing. There are actually quite a few S&P 500 index funds out there. You might have heard of others like VOO or SPY, which are both popular ETFs that also track the S&P 500. So what sets FXAIX apart? One of the biggest reasons I chose FXAIX is the cost. Index funds are generally known for having low fees, but FXAIX is especially affordable. It has an expense ratio of just 0.015%, meaning that for every $1,000 you invest, you're only paying 15 cents in fees per year. Compare that to actively managed funds, where expense ratios can go as high as 1% or more. Low fees are a big advantage because they allow more of your money to stay invested and grow over time. Another reason I went with FXAIX is that since I'm using Fidelity as my brokerage, there are no trading fees for buying this fund. If you use Vanguard, you'd probably go with VOO because it's fee-free on their platform, but for us Fidelity users, FXAIX is ideal because there's zero cost to buy or sell it on their platform. And speaking of low fees, here's why they matter so much. Over time, even small fees can add up and eat into your returns. With FXAIX's ultra-low expense ratio, you keep more of your returns, which can make a significant difference if you're investing long-term. Over a few years, this difference might be small, but if you're investing for decades, those savings can compound and grow. So basically, the lower the fees, the more of your gains you get to keep. Of course, like any investment, FXAIX isn't perfect, and there are a few things to consider. First, since it's tied to the S&P 500, FXAIX is fully exposed to the US stock market. This means if the market takes a hit, so will FXAIX. It's designed to follow the market, not beat it, so you'll see those same ups and downs. And since it's only tracking US companies, you won't get exposure to international stocks, which could be something to consider if you're looking to diversify globally. Also remember that while index funds like FXAIX are relatively low risk compared to individual stocks, they're still affected by economic cycles. During recessions or bear markets, FXAIX will likely drop just as the S&P 500 does, but historically it has always bounced back over time. So here's how it went down. I invested exactly $5 a day into FXAIX for 30 days. My goal was simple: stay consistent, add $5 each day the market was open, and just let the market do its thing. I wanted to see if those little $5 investments could make a difference in just 30 days. I actually chose to invest in FXAIX within my Roth IRA because combining FXAIX with a Roth IRA can be a total game changer for building wealth over time. Roth IRA is a retirement account that lets you contribute after tax money, so the money you invest has already been taxed and any earnings or gains that you make in a Roth IRA grow tax-free. And when you reach retirement age, you can withdraw both your contributions and earnings without paying a dime in taxes. If FXAIX grows by an average of, let's say, 10% a year, my investment would keep compounding tax-free in the Roth IRA. that growth stays intact, compounding faster and building up over time. Essentially, I'm letting time and tax-free growth do the heavy lifting. In a regular brokerage account, I'd have to pay taxes on the gains, which would take a chunk out of my returns each year. Okay, here's exactly what I did. From September 26th to November 6th, I bought exactly $5 worth of FXAIX. That's every market day, so Monday to Friday. I know it sounds a little tedious to buy daily, but for this experiment, I wanted to keep it super simple and stay consistent. Plus, it's really easy with the app. Here's the Roth IRA in my Fidelity app. Swiping down, I can see details like balance, activity, and contributions. Since this is just an experiment, I contributed $150 even though the limit for 2024 is $7,000. Scrolling further, I can see my positions. Now, let's tap on FXAIX. Since I'm buying every day, the price isn't a big concern for me. I tap Buy, then Buy Now, enter $5, and tap Review. Here, it shows my purchase will be completed at the next available price, calculated after the market closes at 4 p.m. Eastern Time. Then I tap Buy FXAIX, and it's done. Order received. If that was too fast, I apologize. I'm still getting the hang of recording my investment process. Okay, here are all my positions. So, this $5 purchase is from November 6th, the last day of my experiment. The order will go through at the end of the day, but I made sure to buy before the cutoff time. As I mentioned earlier, FXAIX has no transaction fees and no investment minimum. It also has a very low expense ratio with gross and net expenses at just 0.01% or about 15 cents for every $1,000 invested. So what happened with that $150? Well, FXAIX had some ups and downs over the month because that's how the stock market rolls. But after 30 days, my $150 turned into $155.94. So, a gain of $5.94. Okay, maybe not millionaire status, but it's a gain, it's a start, and the market doesn't always go straight up. There were some days where FXAIX dropped a little and other days where it climbed. That's totally normal. For me, this was a good reminder of the importance of holding steady. It's all part of the ride. Here's a chart showing what would have happened if you'd invested $10,000 in FXAIX back in December 2014. The line's got its ups and downs, but by October 2024, that initial $10,000 would have grown to around $34,000. Not bad for just letting it ride, right? This chart really shows the power of long-term investing. Even with the market's twists and turns, staying in the game can pay off in a big way. Just remember, the performance data featured represents past performance, which is no guarantee of future results. Investment return and principal value of an investment will fluctuate, therefore, you may have a gain or loss when you sell your shares. Current performance may be higher or lower than the performance data quoted. So what I actually learned from doing this experiment is consistency matters. Just sticking with $5 a day, even on days when I thought, yeah, maybe I'll skip, helped me stay focused. And by the end of it, I had $150 invested that I didn't have before. That's pretty cool. The second lesson, even small investments can add up. I was kind of surprised to see that $5 here, $5 there actually did make a difference. Seeing that growth, even if it's just a few dollars, was a good reminder that small steps count. And last but not least, investing doesn't have to be complicated. I think a lot of people feel intimidated by investing, thinking you need thousands of dollars to get started, but honestly, $5 a day turned into a gain, and imagine that over a year. With compounding, it could grow even more over time. So would I do this $5 a day experiment again? Absolutely. It's low risk, easy to manage, and gives you a feel for how the market works without feeling overwhelming. It's also an amazing way to build a habit that could lead to bigger goals. If you're curious about investing and want to start small, I say go for it. It's a fantastic way to start building that investing muscle and get used to the market's ups and downs without putting a ton of money on the line. That said, this experiment isn't going to make anyone rich overnight, but it's a great way to get consistent with a habit that over time can grow your wealth. So, if you're thinking about starting small but want the potential for real growth, then investing in a fund like FXAIX through a Roth IRA could be a great move. It's ideal if you're aiming to build wealth over decades, and it takes full advantage of the Roth IRA's tax benefits. I highly recommend looking into it, especially if you're like me and believe that even small, consistent investments can grow into something meaningful. Are you also experimenting with daily investing, or do you prefer a different approach? Let me know in the comments. Just a quick note, I'm not affiliated with Fidelity. I chose FXAIX because it's a solid, low-fee option available on my platform. And actually, most of my investments are in SCHD. If you're interested in seeing how my first $1,000 investment into SCHD played out, click the video on your screen right now.